Today we are talking about US stock markets and also crypto, so lots of important news. Let's begin. And we are starting up with economy view. At first, let's have a look at this Ian hurricane that has recently been in the United States. One of this phenomenon that really spooked many inhabitants, and that also brings much of a concern in terms of supply chains that also has suffered during recent 2 years in the US. While supplies from lumber mills have been improving in 2022, there are still issues getting wood to market due to a shortage of rail cars and trucks. The storm possibly will slow deliveries to affected areas, creating, for instance, a glut of lumber and sending prices to some of the other trajectories that also bring in a distortions of supply issues. So we can find that that's maybe more of a local problem, because that hurricane hasn't rolled over many states, but mainly Florida and counties and states neighboring, but it may also bring some of the concerns regarding accessibility of some elements. Right now, we have recently found that this top tax rate cut are going to be reverted. UK is trying to save UK's pension funds, and we can find that that was one of the brave acts to deliver such of a policy change in the such difficult times for United Kingdom. Right now, we can find that any policy decision involves making trade-offs among various risks, but that was the one of a much of a debacle, and that's why maybe that was going into census eventually by reverting this. We will find out the months to come. What we can say, however, is that whenever the Fed, like Bank of Central Bank of England, are moving too slowly to contain inflation, those concerns of going too slow has declined right now, while the risk that high interest rates will cause severe economic damage has gone up a lot, and it is attached to not the Fed itself, but also, as I mentioned, CBO, Central Bank of England. That's why those higher interest rates may spook many of analysts even in a longer time horizon. What about Credit Suisse? We've heard it's on a brink of a collapse. Right now, we can find that even if the shares are hovering near record low, right now Credit Suisse seems too big to fail. Credit Suisse is in the throes of what is expected to be a major restructuring of the investment bank, as governors seeks to return the lender to profitability and put an end to a string of scandals. Right here we have found also a pronouncement that for governors, they admitting that in order to tackle all of those issues, they need just 100 days. So by the end of the year, we'll find out possibly whether those problems have faded away. So Right now, the executives really need to jump on this to inform investors and the general public very specifically about what they are going to do about a restructuring, and that's the thing we'll have you updated about. CEO confidence is near its 40-year low. That's definitely one of the gauges that that index might be a leading indicator of higher unemployment. With such confidence, not many of CEOs would decide to hire new labor power. Easing inflation expectations, that's the one of a more optimistic outlook. Consumer sentiment index is improving a little, but it's still too early to say that we are over. Most consumers expect their incomes to rise over the next year, but only 16% expect their gains to exceed inflation. And even if consumer sentiment is also dropping outside of United States, strong dollar makes US product less affordable abroad, and that's why consumer sentiment, even if in the US is rising, in many other countries is dropping significantly, especially in Europe. So cutting into international sales and hurting profits for multinational corporations that will comprise a significant portion of S&P 500 constituents eventually as well. Pivot in November, the market is expecting another 75 basis point increase in November, but those views are highly divided, so it's very interesting to watch how it eventually turn out. Bankruptcy activity remains extremely subdued. Right now, we can find that higher borrowing costs are pinching even the strongest corporations. That's why we may have this curve winding up. Higher interest rates might be a burden, definitely a burden for many of economies. Gross asset contagion, that's a very interesting chart where you can find a interconnection of different assets. For instance, ABS, that is a low asset-backed securities, has been proved to be correlated with high-grade treasury repos, treasury notes, corporate bond, and then even stock markets by large. So I mean the stocks. That's why when one thing is cracking, there is an interconnection that's leading to the cascade, the economic cascade that may bring a further collapse of other instruments. That's why it's very important to have everything on place and not have it fallen apart. So that's why Bank of England recently decided to get to an endless print in order just to save its gilt market. The incoherent macro policies within countries and absence of policy coordination across countries are both problematic. So can we have another Lehman moment? Right now the problems are not centered primarily in banks like 2008, so I wouldn't really find the Credit Suisse problems as the one indicating that we are right now in a very as we were though backed into the corner, but definitely even if those bigger economic and financial issues in currencies and energy persist, it will also permeate other fragile sectors. We can right now find decreasing our global M2 year-over-year percent change, right now getting back to those levels of a break-even, but with these projections decreasing at current pace of 170 billion per month, we will definitely go into the abyss. So that's why it's spooking many investors, as we are not done yet, unless the Bank of the Fed and the Bank of England or CBOE will pivot as not to make the economy conditions much worse by now. Does inflation come down with a recession? Unfortunately, yes. History says yes, big times. That's the statistics found by MacroAlf on Twitter, and we could find that normally the hard landing is definitely the one case, the one and the one efficient way to tackle very high inflation, and this time possibly might not be other. So it's a ruthless, but it's true. And every time the Fed is raising interest rates, it's always lead to cracking something. What think maybe this time? Just write your opinions in the comment section below the video. And in the last slide of this section, evolution of Atlanta Fed GDP now, real GDP estimate for 2022 in Q3 finds that we are somewhere in a rising expectation that's unexpected, but as we can find, that might be a reason of forming a that could bounce on many major indexes. That's why we supposed to find kind of a relief on major markets due to those more positive projections than expected. In market outlook, we may jump to TradingView, and on TradingView we can find that S&P 500 index is showing a reversal. So after catching them or grabbing the liquidity back during this slide below recent lows, we are right now reverting and trying to cut off all those short positions just to make the bears clear path to get in a bit delayed time horizon. That's the normal price behavior of where the asset is overcrowded with one or second side. There were too many shorts in order to push the price downwards, as it would possibly took too many efforts from the market to push it down. That's why this grabbing liquidity and cutting off those shorts have been necessary. So another stop we have at 30, somewhere around 3800s and low 3900s. Getting back to our presentation, crypto outlook, showing that Solana, this Ethereum killer in cryptocurrency, is down again. Recently suffers another major outage. That means that even if those self-proclaimed currencies finding to be next better Ethereums, it's everything boils down to that they haven't gone through many of disturbances and perturbations yet as to being qualified as such. That's why Solana is one of the bellwether, I would say, of recently, as as it definitely is showing itself as the one as better than it really is. On the other hand, Chainlink, very interesting altcoin startup that is rooted in a network of oracles, which are programs that take off chain data and make it usable by blockchains and dApps, that enable smart contracts to automatically settle when their conditions are met, is announcing a stake-in. So it's very good news for many of investors, and also for those that are looking for a stable income based on cryptographic rules. BlackRock plans another crypto ETF. So BlackRock is the one of the hedge funds that is finding even in this very difficult conditions in the crypto markets, a very interesting finding of setting up another ETF. So maybe they will find during this deglobalization happening that this truly censorship resistant and decentralized systems can't be politically attacked through single choke points will be necessary for many users. That's why they are finding another space for them to invest in. So that's one of the interesting news. Whereas many misallocated in speculative assets doesn't create jobs in the long run. In the meanwhile, they may bring a kind of a alternative to such of a broken banking system. That's why it's still in the interest of many. This Mica Catalyst is the one of a regulation process in Europe, inside of which there will be a necessity to be authorized to issue crypto assets, and also every single entity to make an emission of new assets, of crypto assets, will have to go throughout the compliance procedure with certain prudential rules when marketing crypto assets. So there won't be that easy to run an ICO or IEO as Mica is entering the crypto world step by step, possibly even this year. In terms of market movers, let's have a look at trading calendar, and I will just quickly have a look at what happened today as well as yesterday. So yesterday we had PMI from US, and that one is oscillating around 50-ish area, but getting closer to this neutral level. That is kind of concerning. JOLTS job openings right now get lower than expected, and we have many of Fed speeches on Tuesday. However, on Wednesday we are expecting many PMIs from Euro area, as well as balance of trades from Canada and US, and right after the ISM non-manufacturing PMI from USA. So there was a manufacturing right over. We'll find out what's the non-manufacturing, and that's it from the newest events out of the economic calendar. Getting back to that section, we have some earnings. On Monday we had out of the most important earnings among Internet Initiative Japan. Today we had equity brands, and on Wednesday we'll have Lamp, Weston and Helen of Troy but there are not many of the most interesting names to introduce its earnings. That's why I don't really hang on over this section. Right now let's have a look at trade idea section, and for me that's Euro USD. As recently we were just getting back out of this trough that I've appointed to happen, and we are getting closer and closer to this trend line that has been respected many times before, and that's very interesting what will happen around those levels. That's why I would watch Euro USD in the days to come. If it make any kind of reversal pattern, I would literally pull the trigger and bet against this currency pair. So I'm just calling you today to watch this very carefully, but not make any abrupt decisions based on that solely we are hitting this trend line. Rather watch to what's price behavior around this area, and I will keep you updated tomorrow and the day after tomorrow what to do with this position. So that's it in today's episode. Thank you very much for watching, and see you tomorrow at the normal time, 15 to 9 a.m. East time.